All right, so we've got a really interesting set of source material here today.
Yeah.
And it all points towards a company called St. Joe,
Uh-huh.
ticker Joey. And, I think most people probably know Florida for its beaches and its theme parks and,
Right.
all that stuff. But St. Joe
Mm-hmm.
kind of has a history that goes way back.
Yeah.
And it started way back as a timber operation in the Florida Panhandle
Yeah.
and has since made this fascinating shift into something, much more involved than just your standard kind of real estate developer.
Yeah, that's right. And looking at your sources, St. Joe emerges as a really unique player, especially when you stack them up against like the usual big home builders like
Right.
your Lenners and your D.R. Hortons.
Right.
We're not just seeing another sprawling subdivision here.
Exactly.
Yeah.
And, thinking about those, typical master planned communities that you might find, I don't know, maybe like outside of San Diego or something,
Mm-hmm.
where you've got a sea of kind of similar houses,
Yep.
maybe some security gates
Oh.
and, for anything beyond, your house, you're
Yeah.
jumping in the car and getting on the freeway.
Right.
That's kind of the traditional approach.
Uh-huh.
And St. Joe seems to be aiming for something quite a bit different,
Yeah.
almost like they're in the business of building entire towns,
Yeah.
from the ground up.
And while there are other companies that are sitting on large tracts of land that
Yeah.
have an eye on development, like Pure Cycle,
Mm-hmm.
or Tayshaun Ranch comes to mind, their typical strategy leans towards that conventional development model.
Right.
So St. Joe's approach, as highlighted in your sources, really takes a different tacking.
Yeah, and it hasn't always been, a straightforward story for St. Joe.
Mm-hmm.
The sources mentioned that they've kind of been considered a battleground stock over the years,
Right.
with, some investors thinking that, their vast land holdings
Yeah.
are this gold mine of development potential.
Yeah.
And others are seeing mostly, undeveloped forest and wetlands.
Mm-hmm.
And we even had, some pretty well-known figures in the investment world weigh in on this, like Bruce Berkowitz joining their board,
Yep.
or David Einhorn, initially kind of betting against the stock before revising his view on the value of that land.
Mm-hmm.
So it's been quite a story.
Yeah. What's fascinating here and what our deep dive today is going to really focus on
Yeah.
is not so much, the stock market drama or the investment angles,
Right.
but really getting to the core of it.
Yeah.
What exactly is St. Joe's strategy
Yeah.
with this town building model,
Mhm.
and how does it set them apart?
Okay, let's dive into that a little bit. So this idea of town building,
Right.
based on what you sent me, what does that actually look like,
Sure.
when it's put into practice?
Yeah. So the concept underlying all of this is often referred to as new urbanism.
Okay.
And it involves, master plan communities, yes, but with a critical distinction,
Okay.
which is the intentional integration of vibrant public spaces.
Oh.
So it's not just rows of houses. You're
Yeah.
actually seeing stores, theaters, gyms,
Mm-hmm.
all of the everyday amenities and social gathering spots intentionally woven into the residential fabric.
So it's much more integrated
Mhm.
than, just tacking a shopping center onto the edge of a housing development.
Exactly.
Yeah.
And even going, beyond that, you might even see, the potential for unique community events.
Yeah.
Maybe bringing in speakers or hosting local festivals,
Mhm.
things that foster a sense of place.
Okay.
Beyond that, you might see things like, soccer fields, nature preserves, accessible public land,
Right.
even pedestrian-friendly zones designed for walking rather than driving,
Yeah.
all mixed with a more varied density of housing and commercial areas.
Yeah.
So the goal here is to cultivate a
Yeah.
really strong sense of connection and community among the people who live there.
And this is where it gets, I think, really interesting.
Yeah.
Because the sources that you sent me really point to a significant potential upside to this kind of, thoughtful design.
Yeah.
When you successfully create that kind of vibrant public square,
Mm-hmm.
that authentic sense of place,
Mm-hmm.
people don't just want to live there.
Right.
They often become really invested in the community.
Yeah.
And that enthusiasm can translate into some really significantly higher property values.
Yeah, that's right.
I mean, the sources were suggesting, potentially doubling or even tripling the pre-development land value
Yeah.
in some cases.
Right.
And that's driven by that iconic architecture and that pedestrian-friendly design
Mm-hmm.
and that thriving town center.
Yeah.
That seems to be where the upside comes in.
And that's the significant potential reward here.
Yeah.
However, as your sources also clearly lay out,
Yeah.
there's a considerable challenge here,
Okay.
which is the higher initial investment
Right.
and the greater risks associated with the developing commercial real estate
Mm.
alongside the residential. So, it's a much more complex
Right.
and
Yeah.
capital-intensive undertaking
Yeah.
than just, simply building and selling houses.
Right. Because you're not just selling a home. You're curating a whole lifestyle.
That's right.
Right.
You're creating a place.
Yeah.
Yeah.
But the conclusion from your sources was quite compelling,
Yeah.
which is that despite those kind of higher upfront hurdles, this new urbanist town building approach can ultimately deliver financial advantages that are on par with, if not superior to, traditional real estate development.
Right.
But you have to look at it over the long term.
Absolutely.
Right.
And to really illustrate that long-term potential, your sources offer some really telling examples.
Okay.
Let's start with Seaside, Florida.
Okay. Yeah, Seaside, I've heard of that.
Yeah. It's often considered, the original new urbanist town in the U.S.
Mm-hmm.
and seems to be a key blueprint for St. Joe.
Okay.
So back in 1984, you could buy a cottage in Seaside for around $50,000. By the year 2000, those same cottages were selling for $500,000.
Wow.
And in its first decade, land values in Seaside jumped almost 300%,
Wow.
above the average U.S. appreciation rate.
Right.
By the mid-2000s, average home prices had climbed to $1.4 million.
Wow.
So those early buyers experienced some really incredible gains.
Yeah, that's a huge increase.
Yeah.
And it sounds like Seaside wasn't just a one-off success story.
Not at all.
Right.
Your sources also highlight Serenbe, which is a community established near the Atlanta airport in 2004.
Okay.
And after about 2 decades of development, the median home price there now is around $1.2 million.
Wow.
And, considering the initial home prices were in the mid-six figures, that's some pretty substantial appreciation.
Yeah.
And what's fascinating is that, Serenbe's success is often attributed to its focus on integrating nature, arts, and a strong community feel into its design.
Yeah. And these aren't exactly located in, major urban centers either.
That's right.
Right. Serenbe's near the airport, but not in downtown Atlanta. And Seaside is in the Florida Panhandle.
Yeah. And then there's Seabrook, which is a beach town in Washington state.
Okay.
And one of your sources, referring to their marketing material, claims an average annual home value increase of around 15% since 2004.
Wow.
Now, while that specific number, might be a marketing claim,
Right.
the reality is that Seabrook has transformed from a relatively remote spot into a highly sought-after coastal community with homes now priced in the $1 to $3 million range.
Okay.
Even though it's a 3-hour drive from Seattle.
Okay.
And that appreciation is often linked to its walkable design and its development as a year-round destination with a growing list of amenities.
Okay. So the main point seems to be that, if you thoughtfully plan these walkable towns with these vibrant public spaces, they tend to perform at least as well, if not significantly better than conventional developments.
That's right.
When you look at long-term appreciation, even in, more rural locations and, with surprisingly high property values.
That's the core idea.
Yeah.
It's a different way of creating and capturing value.
Yeah.
Now, your sources also delve into this, kind of unique timeline that's involved in this town building model.
Okay.
And it's definitely not a quick profit scenario.
Right. It's not like flipping a house or something.
Right.
Right.
Your sources talk about a slow build-out process.
Yeah. So what does that typically look like?
Well, in the early stages, you generally see fewer amenities.
Right.
And as a result, house prices are typically lower.
Right.
But as those amenities begin to appear, a new shop opens.
Yeah.
A community center is built.
Right.
A park is established.
Yeah.
This creates a positive feedback loop.
Right.
The amenities attract more buyers.
Okay.
Those buyers provide more demand and potentially more resources for further amenity development, which in turn helps drive up home prices.
So there's like a gradual kind of snowball effect.
Yeah, exactly.
But it sounds like it demands a lot of patience from investors.
It does.
Right? The sources we're talking about, a 10, 20, even 30-year horizon for seeing, those more significant gains.
Right.
And that's a key thing to remember.
Yeah, the really significant appreciation really tends to kick in as the town matures. And those amenities kind of compound in value and desirability.
Yeah.
And this long-term nature presents a particular challenge for a company like St. Joe,
Okay.
given the sheer scale of their land holdings,
Right.
reportedly around $9 billion worth.
Wow.
So, there simply isn't enough immediate demand or development capacity to transform all of that land quickly.
That makes sense. It's a marathon, not a sprint.
That's right.
And it sounds like this kind of long-term view also has implications for how these projects are financed.
It does.
Right.
Your sources explain why traditional real estate funds often shy away from this model. The 20-plus year time frame is generally too long for their typical investment cycles.
Right.
And banks can also be more hesitant to lend due to the somewhat non-traditional nature of these projects and the limited number of well-established large-scale examples.
Okay, but St. Joe, being a large publicly traded corporation, they kind of have an advantage there, don't they?
They do. They have access to, a wider range of financing options like bonds, stocks, and traditional loans.
Yeah, so they have more diverse financial tools at their disposal.
Yeah, and the sources also make an interesting point, which is that even with these longer payback periods, the returns from well-executed new urbanist developments can be comparable to more traditional, faster turnaround projects like condo buildings. So, it's about understanding that different timeline and the compounding effect of the amenities. Investors with a more conventional real estate mindset might be underestimating St. Joe's long-term potential here.
Interesting.
Yeah.
And the sources did indicate that, some of St. Joe's initial ventures into this model, after about 20 years, are now beginning to generate significant cash flow.
Yeah.
Which is a positive sign for their future projects.
It is.
Even if those also require, that long-term perspective.
Absolutely.
Now let's kind of dig in a little deeper into the financial performance of these town-building communities.
Okay.
Drawing on the insights from your sources.
Yeah, so beyond just sales prices. What are some of the other key financial takeaways here?
Well, we've already touched on the strong long-term appreciation seen in places like Seaside, Sorrento, and Seabrook. But beyond that, the sources highlight that developers in these thoughtfully planned environments often command premium pricing.
Okay.
They're not just selling square footage. They're selling a lifestyle, a sense of community, a unique environment. Okay. And St. Joe themselves have seen this with their watercolor development, right?
Exactly.
The sources referred to that as, highly profitable and award-winning.
Right.
So how does St. Joe's own experience, perhaps with watercolor, align with this idea of premium pricing?
Well, by focusing on, carefully curated town centers, appealing recreational amenities, and consistent architectural design codes, they were able to, sell lots and homes at higher price points, resulting in strong profit margins.
Okay, and it's not just about that initial sale either.
It's not. But the sources also point to, strong rental yields, especially in resort towns. So, in Walton County, Florida, where you find Seaside Watercolor and Ellis Beach, a significant portion of the revenue comes from vacationers with a high average household income, around $250,000 back in 2019, according to one source.
Wow.
Yeah.
That makes sense. If people are drawn to these unique communities for vacations, the demand for rentals would naturally be high.
Precisely.
Right.
And that high rental demand creates a positive cycle.
Okay.
It supports local businesses.
Right.
Which in turn makes the community more attractive to both residents and visitors, further bolstering property values.
Yeah.
And this is a key distinction from your typical second home subdivision, which might remain largely vacant outside of peak seasons.
Okay, so these aren't just attractive places to live.
Right.
They're also kind of significant drivers of economic activity.
Exactly.
In the region.
The sources talk about, the thriving business activity in more established town-built developments.
Right.
So Sorrento, for instance, now supports over 40 independent businesses.
Wow.
Creating jobs and a local tax base.
Right.
And even Seabrook, which is newer, boasts around 25 businesses and has even attracted a new school and wellness clinic as its year-round population grows.
Okay, so the overall picture is one of, strong long-term economics for well-executed town-building projects.
That's right.
Even if it takes, a decade or more for the full financial benefits to really materialize. And that long-term investment horizon of, 10 plus years seems to be a recurring theme here.
It is.
Right.
The sources repeatedly emphasize, the patience that's required.
Right.
Seaside took decades to reach its current status.
Yeah.
Serenity is still evolving after 20 plus years, and St. Joe's large-scale projects are also designed for phased growth over many years. And that gradual absorption of land and development is actually a key strategy for maintaining pricing power and appreciation.
Okay.
The biggest gains often occur after a community reaches that critical mass of desirability.
Yeah, and the sources acknowledge that there will be short-term ups and downs.
Of course, like Seabrook during the 2008 recession or Las Catalinas in Costa Rica. But, the long-term trend for these well-planned communities tends to be positive.
And that long-term perspective is really crucial when you consider, St. Joe's stock.
It is.
The sources were suggesting that it might take 20 plus years for their town building strategy to really have a substantial impact on their earnings and stock price.
That's right.
And, their experience in the 30A area of Florida with developments like Watercolor really illustrates it. I mean, it took years for that community to build out.
Right.
And for property values in the entire surrounding area to multiply.
Yeah, and St. Joe's stock performance has kind of mirrored those long cycles.
It has.
With a surge in the early 2000s, a significant drop in 2008,
right,
and then a gradual recovery and more recent climb.
Right. So for long-term holders,
the
underlying asset value has been increasing despite, the volatility in the stock price.
Exactly. Town building isn't a quick flip. It's about creating these enduring, appreciating assets.
Yeah.
Which, for patient investors, can potentially outperform the broader market and conventional real estate over the long haul.
Okay, so St. Joe is, involved in this town building model.
Right.
But how do their actual projects compare?
That's a great question.
Yeah.
To these ideal new urbanist examples that we've been discussing, your sources provide a really nuanced perspective here.
Okay.
Highlighting areas of alignment as well as some key differences.
Okay.
So on the positive side, St. Joe has clearly embraced these town building principles in some of their Gulf Coast communities.
Okay.
Like Watercolor and Watersound Beach. These developments prioritize walkability, the creation of public spaces, and have that, distinct kind of coastal town aesthetic with established architectural codes. Watercolor in particular is often cited as a major success story with very high resale values. So, it sounds like they've effectively applied the core principles that made Seaside successful in those locations.
So they've effectively replicated the Seaside model in those areas?
To a significant extent, yes.
Okay.
And their newer town center projects, like Watersound Town Center, which includes a Publix grocery store and other services, also aim to create, those kind of essential self-contained community hubs.
Right.
Even their partnership on the Latitude Margaritaville Active Adult Community incorporates elements of town building with its own town square.
Okay.
And a focus on pedestrian-friendly design.
Interesting.
Even within a more, private, age-restricted setting.
So they're definitely not ignoring the model.
Yeah.
But the sources also point out where St. Joe's approach might diverge a bit.
Right. Not all of their projects adhere strictly to this template.
Okay.
For example, after Hurricane Michael, they launched some art for conventional fast-track subdivisions in Bay County to quickly address the urgent housing needs. So these were more focused on, rapidly delivering housing units than creating, fully integrated mixed-use, walkable neighborhoods.
So it's a bit of a hybrid strategy depending on, the specific needs and context?
Precisely.
Okay.
And even within, their larger master plan communities in Walton County, they often sell parcels to national home builders who might then construct, more standard suburban-style homes, which can dilute that integrated town-like feel in certain areas.
Right.
And when you compare them to some of the more iconic new urbanist examples, like Serenbe, St. Joe's projects often exhibit lower density and a less diverse mix of uses, at least in their current phases. Serenbe, for instance, really clusters homes with shops and restaurants and even agricultural elements within these really compact village centers. fostering a very, organic and interconnected feel. Yeah. St. Joe's larger land holdings, might allow for that lower density.
Right.
But it does result in a different kind of community experience.
The sources even brought up Trilith in Georgia,
right?
Near Pinewood Studios,
yeah.
as a potential kind of benchmark with its really intensive mixed-use development.
Right.
It sounds like St. Joe's current communities,
yes.
Might not have quite reached that level of integration yet.
That's a fair observation.
Right.
And the sources also touch on the inherent differences between the kind of, visionary individual developers who often spearhead these iconic town building projects and a large publicly traded corporation like St. Joe, which historically, has been more focused on land monetization and delivering shareholder returns.
Right.
So, this can naturally lead to a more measured, phased approach to development.
Right.
However, it is worth noting that St. Joe has been increasingly emphasizing placemaking in their investor communications.
Okay.
Highlighting their hotels, their marinas, their town centers.
So it seems like their most successful projects are the ones that align most closely with the town building model.
That's right.
Those 38 communities.
Yeah.
And the developing water sound areas where they're really integrating, land preservation, infrastructure development, and those crucial gathering places.
That's right.
The main differences might just come down to, the speed of execution and the overall kind of cohesiveness of the final product.
Exactly. And, with their extensive land holdings and their ongoing partnerships. St. Joe is uniquely positioned to potentially create, multiple town-like communities over time.
Right.
The key question, as your sources suggest, is whether they will fully commit to those, higher aspirations of town building.
Right.
Things like, greater housing diversity, a stronger emphasis on, arts and culture.
Right.
Truly walkable mixed-use environments.
Yeah.
Or if they will, primarily stick to the more familiar territory of, upscale master plan subdivisions.
That makes a lot of sense. So if St. Joe, really embraces this town building strategy more fully, what could that mean for their profitability outlook?
Right.
And the potential of their stock?
Well, the sources paint a potentially optimistic picture here.
Okay.
St. Joe's current strategy appears to be a prudent one.
Yeah.
They're leveraging their land assets to generate recurring income through hotels, clubs, retail spaces, apartments, which, nicely complements the longer-term town building approach.
Right.
By creating, more diversified revenue streams.
Yeah. Their reported 2024 financial results, indicate steady growth.
They do.
And there's strong demand for housing.
Yeah.
In their key markets, driven by in-migration and a perception of a high quality of life in the region. So if they can effectively replicate that seaside effect across, more of their substantial land holdings, the long-term financial payoff could be substantial.
It could.
In terms of rising property values and rental income.
Absolutely.
And the example of, water sound origins potentially evolving into a fully functioning town.
Right.
Really demonstrates how they can unlock significant value, by transforming what was once timberland into high-value residential and commercial lots, while simultaneously retaining income-generating assets.
That's right. Now, directly comparing an investment in St. Joe's stock to owning property in a highly successful town like Seaside isn't a perfect apples-to-apples comparison.
Of course.
The stock price is subject to broader market forces and investor sentiment, but the underlying principle is similar. St. Joe essentially holds this large portfolio of developable town sites in a desirable and growing region.
Right. And their reported land book value is also generally considered to be below current market values.
That's right.
So successful development has the potential to significantly boost their net asset value over time.
Absolutely.
And as these communities mature and become more established, the income generated from those recurring revenue streams, it has the potential to grow considerably.
It does.
So for investors who are, willing to take that long-term view, the potential returns could be pretty attractive.
That's the argument presented in your sources.
Yeah.
Over a 30-plus year time frame,
Yeah.
shareholders could potentially benefit from both the appreciation of the underlying assets and the expansion of cash flow.
Yeah.
Much like, those early investors in successful new urbanist communities.
Mm-hmm. And while the stock will undoubtedly experience periods of volatility, management's recent initiation of dividends and share buybacks suggests, a growing focus on returning value to shareholders over the long term. So if St. Joe executes its town building strategy effectively, the stock's returns in the coming decade, could indeed mirror that kind of compounding growth.
That's right.
Seen in well-planned communities like Seaside.
Yeah.
With the important caveat of potential execution risks and the inevitable market cycles, of course.
Of course.
Right.
But the underlying thesis is that building these desirable, walkable communities offers a certain level of resilience and long-term value.
Right. High-quality, well-designed, walkable towns.
Yeah.
They tend to hold their value more effectively during economic downturns.
That's right. Right.
Due to their inherent scarcity and strong demand.
Yeah. Expert speaker.